Good afternoon, traders. It is Friday, March 1st, 2019, and the U.S. stock market is closed. Hey, if you watch my videos very long, you know I do not generally like Fridays. Now, there are exceptions to this. I think it was last Friday, or maybe the Friday before. I can't remember. We just had a great day, best than we had in several weeks. But most Fridays tend to be terrible. I call them Freaky Fridays, and today was definitely a Freaky Friday in the markets. We did not do well, but I'm just showing you the Dow chart here. Look at this thing. This thing opened up, just screamed. It looked like it was going to go to the moon, and then it gets up here, and it's not up in this area for less than 10 minutes, and then it plummets and all the way down to here. And I think I'm kind of eyeballing this, but up here we're up, over 250 points up here, and I think from the top here to the bottom is pretty close to 300 point range. And then it recovers and ends up closing up 110 points. Now, how are you going to make money with that kind of pattern? And it don't make any difference what you do. Short sellers aren't really going to make any money there, and the people buying don't make much money either. I'm sure if I went on the internet and I could find all kinds of so-called stock experts who would tell me why the markets were doing this today. I have my own ideas. You can actually, I have an article someplace on the website, and I called it Robert's Rule of the Screw. And Robert's Rule of the Screw is the principal thing that drives markets is they're going to do whatever they have to do to cause the maximum damage to the maximum number of people. And what I felt like was going on today is basically, the Dow's been unbelievably powerful since the Christmas lows. Just incredible. And all of a sudden, what you have is the great majority of investors can see, hey, this market is going crazy. It's going up, up, up. It's a wild bull market again. And so they all jump into this, and this kind of day is what the markets are going to do to screw the maximum number of people. And that's what causes these crazy price fluctuations. Anyway, I don't have a solution for it, folks, but this was a classic example today. This is just a you're screwed type of day. Uh, we came in with five stocks, only five stocks today. Were not good trades, but by the time we got out of that mess, we were screwed to the tune of almost $13,000 in losses and closed out. Really tough. And then probably after everybody realizes, threw up their hands and said, I'm not going to trade this anymore, then the stocks kind of stabilized and started moving up again. And we got into 20 new positions. That's a lot of positions for us. That's 2/5 of our entire portfolio. And we're holding positive almost $7,000 in open trade equity. Now, you may remember yesterday, the day before yesterday, we had over $5,000 in positive equity, and that went to negative 7,000 yesterday. So that was a real kick in the butt. Now you might think, well, maybe that's going to do this again, and I'm not saying it couldn't, but I have done this trading enough to know that these patterns almost never repeat themselves back to back days. And so, based on my very weird logic here, I am going to predict that probably Monday we'll do pretty well with these 20 positions because they're not going to repeat the same pattern that we saw yesterday. That's my prediction. And it's just based on experience and knowledge of how crazy stocks can be. Anyway, so the Dow ends up 110 points. Let's look at. I want to look at another thing. I'm showing you our. This is actually our worst trade today. This is El Dorado Resorts Incorporated, which is ERI, and this thing yesterday opens way down here and then it shoots up here in that first 15 minutes. Unbelievable. And normally when I see this pattern, big breakout, it's just, it's like it's almost certain it's going to go higher. We got in a nice pullback there to this, and then for the first hour or so, this was looking real good. And then it really started to give way yesterday, and then look at here, we're stopped out down here almost on the low. I mean, this is a nightmare trade. It costs us let's see, $4,200. Okay, that's a bad loss, but it's not the end of the world. But it's just a really rotten trade. But what I'm pointing out here is it's a really rotten pattern. We get in at the beginning of the day one day, and then at the beginning of the day the next day we're stopped out almost on the low, and that was our worst trade. Now I'm going to tell you the problem here is that we saw and we had those 5 positions, and almost every one of those positions did the same pattern. And these stocks are not in the same industry sectors. They should be totally unrelated, but that isn't what happened. They look like cookie cutter trades, and they're all bad. The whole portfolio is lousy. And I know I'm kind of going off topic a little here, but I've been doing this for 25 years, and this happens. I've gone through this many, many times. We see this thing in the morning right after the open. There is an opportunity to get out of these trades without being killed, and yet because our system tells us to, we stay with them. Stay with the system. And that's what we did here today. We stayed with it, and we get stopped out on almost the low. We would have done much better to have gotten out of this thing on the open, but I didn't. And from time to time, I've been doing this. I can't tell you how many times I've gone through this thing. I get so disgusted with these kinds of patterns. They seem so obvious to me when and so, like with managed accounts, I say, okay, I'm not going to wait. I'm not going to wait this period of time after the open. I'm just going to get out right after the open and save us some money. And I can tell you almost inevitably, when I have done that with real money, either my own or managed money, I get out shortly after the open, and then the stocks go sky high, and I miss huge profits by getting out early. It just seems like I'm always on the wrong side when I try to use subjective judgment to predict these things. And I always come back to something I have learned and relearned and learned time and time again that you're much better off to stick with a mechanical trading system, even though sometimes you just get killed, like you see with this pattern here. Other times you just rake it in. But if you stick with the same pattern day after day after day, you do make a lot of money over time. And it's just like I have to learn that lesson at least 2 or 3 times every single year that I trade. Okay, that's my speech. I'll show you 2 more good stocks and call this video quits. This was a pretty good trade. This is SENS, Sensonics Holdings Incorporated. I think that may be a biotech company. I'm not sure. Anyway, we got this second hour closed there nearly its high. We have $2.3 thousand in Sensonics Holdings. And then this is the best one we had. This is Aqua Metals, AQMS, and this was, this stock pretty cheap. Like it was under $3 on the open, and we ended up buying over 16,000 shares of this thing. And so when you got that much, it doesn't have to go up too far to make quite a bit of money. And anyway, it kept moving very nicely here, and we are holding $5,000 in open trade equity in Aqua Metal. So that looks really good. Hey, you guys have a fantastic weekend. This is Trader Bob signing off, and I will be back here on Monday.